Ever wondered what would happen to your investment returns if you never touched a single one of them, but rather reinvested each one of these returns? Well, you might think it's a small thing. What would a 300 kwacha from dividends in shares of companies that I've invested in do to my finances? For many people, the natural instinct when they receive returns from their investment is to spend the money, particularly those that feel like this amount is just too small, 300 kwacha, 500 kwacha, and the instinct is to spend this money rather than reinvest it back into the asset that they had invested in originally. But what if I told you that the simple act of reinvesting your money is the most fundamental and most important principle when it comes to building your wealth? In today's video, I want to demonstrate to you the power of reinvesting your returns back into the assets that you invest in so that you can benefit from the eighth wonder of the world, compound interest. But before we get started, I would like to encourage you to subscribe to my channel. If you haven't subscribed already, click the subscribe button. You're going to find it at the bottom. It's down here. Click subscribe right now. Now let's get started. We are looking at the importance of reinvesting the returns from your investments. What does it mean to reinvest? When you become an investor, perhaps you bought some shares of companies listed on the LuSE, or you've bought bonds from the government of the Republic of Zambia, or you've also bought treasury bills, also from the Bank of Zambia. You might also have unit trusts. So you are an investor in these different types of assets. Every year, we expect you to make some type of return, depending on the type of asset you are investing in. Let me give you an example of the types of returns you will make for each asset class. Let's look at shares. For the shares, if you invest in companies that pay dividends, these are companies we call dividend paying companies, we expect you to make annual income in form of a dividend. A dividend is a part payment of a company's profits that is given to you in form of cash. Most times you receive that money into your bank account. That is a return on your investment. It's a return on the investment you've made by buying shares. So you get annual dividends. The amount of the dividend you get is dependent on the dividend yield that the company is paying out. So it's dependent on the dividend yield. And dividend yield is simply a percentage of the return that you are going to get based on the amount you've invested in that company. So for example, if you've invested 10,000 kwacha and the dividend yield for a company is 7%, you expect to get at least a 700 kwacha per year from this investment in form of dividends. So the 700 kwacha becomes the return that we are now talking about when it comes to reinvesting that amount. So for shares, the amount that you reinvest is the dividend income that you make every year. Dividends are normally paid out twice every year. You get them when the company declares them, and there's normally a date that they communicate when the dividends are going to be paid out. Let's look at GRZ bonds. If you have bought GRZ bonds, we expect you to be getting biannual coupon incomes. Every 6 months, you get a coupon income. The percentage of the coupon rate that you get is dependent on the tenure or duration or period in which you are investing that money into the government bond. We've got 6 types of tenures in Zambia. You can invest in a 2-year bond, in a 3-year bond, 5, 7, 10, or 15-year bond. The longer the duration or period, the more the coupon rate, or the higher the coupon rate, and the more the coupon income you're expected to make every year. This is because the longer you keep money invested with the government of Zambia, the more risks you are faced with, particularly risks to do with inflation. You know that with time, money loses value. That's why investments in GRZ bonds for longer periods of time attract bigger coupon rates compared to shorter term GRZ bonds. So when you get your biannual coupon income, that is the amount you're supposed to reinvest by buying a new bond. With government bonds, unfortunately, you cannot go back and say, I would like to top up that bond that I bought last year, which was worth 50,000 kwacha. I made about 11,000 kwacha in interest or in the coupon income. I would like to top up that 11,000 into the 50,000 so that it's now 66,000. With the government bonds, you cannot reinvest your returns in that way. The only way you can reinvest coupon incomes is by buying a new GRZ bond. So if you bought a 15-year bond and you've made an annual coupon income of 11,000, what you need to do is to buy a new bond, perhaps for the same duration or for a shorter duration, maybe 5 years, depending on the prevailing coupon rate at that time. Because coupon rates are dependent or determined during the auction. So the coupon rates might have changed and you may not be able to enjoy the same rate that you had enjoyed when you bought this 50,000 bond, 15-year bond. So you need to look at what are the prevailing coupon rates during the time that you want to reinvest that amount. So that's another example. The third example is unit trusts. So returns from your unit trust. When you buy unit trust, you are buying a unit of an investment that a fund manager has created. So the fund manager may be targeting different investments. Perhaps they are looking at a balanced investment fund. So they've got investments in property, investments in shares, investments in bonds, and then they will combine these investments as a collective with other investors. And then when the fund is making profits, they will pay you out a percentage of the profits that this fund is making, depending on the net assets of that investment. So when you get that return from your unit trusts, you can do the same thing. Buy more units so that you get to own a bigger share of the units, or increase your principal amount so that next time they calculate how much return you are making on your units, it will be larger because you'll be paid from amounts that you will have reinvested from a principal amount. So for example, if you had bought 10,000 kwacha of unit trusts and then you've made a return of, let's say, 1,000 kwacha, you can reinvest that 1,000 kwacha back so that it's 11,000 kwacha. And with unit trust, you can also find out from your fund manager. They may have a policy where you can reinvest your returns directly, unlike the way we get our dividends or coupon incomes where the money comes straight into our bank accounts. With a unit trust, you may have a provision of asking the fund manager to reinvest whatever returns you are making from your unit trust investments. So this is something important to find out from your fund managers. This is what we mean by reinvesting your returns of your investments. It is simply reinvesting the profits that you are making on your shares, in your dividends, as well as in your unit trusts. The profit that you make is what you need to reinvest back so that you can grow the principal or the capital amount. That is the amount that is going to ensure that you can get much more income later on. You may be wondering, how does the money get to grow? Just by reinvesting. The secret that many investors world over understand is that when you reinvest your returns back into the principal amount, you benefit from what is referred to as compound interest. Compound interest is making profit on top of the profit that you'll have earned from your investments. And even small amounts build over time. The secret is the consistency and the length of time you keep reinvesting. So the longer you reinvest your money, the more it's going to compound and the more you are going to grow and build your wealth faster. So today I want us to talk about 2 ways you can grow your wealth faster, even if you are getting returns of 300 kwacha or 500 kwacha per annum. How can you grow your wealth faster? So the first way is by reinvesting the returns. The second way is by adding on additional contributions towards the principal amount, so that you have two types of money being added to the principal amount. You have your returns as well as an additional contribution from your savings that you are adding to the principal amount, so that you can quicken the process of building wealth and ensuring that the money is working for you. So those are the 2 ways you can grow your money faster. Now, I know you're thinking, it's just a small amount. What difference does it make? Well, let's assume that you had a 10,000 kwacha investment and it makes you a 12% return per annum. And you decide to follow the principle of reinvesting your returns. How will your money grow over a 5-year, 10-year, or 15-year period? After 5 years, your 10,000 kwacha will have grown to 17,600 kwacha. After 10 years, it would have grown to 31,000 kwacha. After 15 years, it would have grown to 55,500. And after 20 years, it would have grown to nearly 99,000 kwacha. This is all because you are reinvesting the returns, the dividends, back into buying the shares. This is the power of compound interest. And this is why people say that you can start with a small amount and it can build over a period of time. So why do people hesitate to reinvest their returns? It's a natural instinct. And many of us feel like 300 kwacha, 500 kwacha, these are small amounts. So this kind of mindset is what prevents us from reinvesting the returns and prevents us from benefiting from the power of compounding. So that's one reason. We just feel like the amounts are too small. And we need to change this mindset. Going forward, we need to reinvest whatever returns we are making, no matter how small it is, knowing that it is going to be compounding and will start working for us by adding on to the principal amount. And that is the key that wealth builders world over understand clearly, and that many people that don't build wealth don't realize and don't utilize. The second reason is really undermining the power of compound interest, because many of us rarely get to see how compounding works. We've made investments in assets where we are unable to see the power of compound interest. Perhaps you had a savings account where you had hoped to see your money doubling or compounding, and then because the savings account is not operating the way it's supposed to be, perhaps you are withdrawing cash and you are being charged extra bank charges, and you don't allow your money to stay in that account maybe for a substantial period, a year, for you to actually see how your money is growing. You realize that this compound interest is just a flash. It doesn't exist. So you need to allow your time to sit in an investment for you to be able to see the power of compound interest. And in due time, you are going to see your money compounding. So the secret really is to be consistent and to create a strategy. So what are the strategies you can implement when it comes to reinvesting your returns? One of the strategies is to ensure that whenever you get money from your dividends or from your coupon income, from bonds, or your interest income from treasury bills, you need to ensure that you automatically divert that income into buying another investment. If it's possible for you to make this process automatic, perhaps you've invested in unit trusts and it's possible for you to reinvest the returns from the unit trust, you need to talk to your fund manager so that you make this automatic. That is the best way of implementing this reinvestment strategy. The second is, rather than just focusing on the returns alone, you can quicken this process by also adding on additional money or contributions. So you could have a principle such as, every month I am going to be buying shares in this company for the next 12 months or for the next 2 years, so that your 10,000 kwacha next month will be 11,000 kwacha, the following month it will be 12,000 kwacha. By the time you are getting a dividend, it will be based off a principal amount which is larger than where you are starting from. And then you're also going to reinvest the dividends back into the shares. That way, you're going to quicken the compounding process much more than if you're just focused on reinvesting the dividends alone. The same principle applies even to government bonds, even to unit trusts. The key thing here is to do what is referred to by many experts as dollar cost averaging, meaning that every month you're spending a small amount of money buying the same type of asset. If it's 5-year bonds, you're ensuring that every month I'm buying a 5-year bond with a 5,000 kwacha, and I'll be doing this for the next 1 year or for the next 2 years. Create a target that is affordable, that is within your budget. That is the best way to quicken the compounding process. Then finally, I would love to advise you to track your progress. There are so many simple ways you can track your progress in terms of the investments and the returns that you're getting. For the shares, all you need to do is list down the companies you've invested in a spreadsheet, in Excel. List them. Maybe you've got 3 companies, Copperbelt Energy, Airtel, Chilanga Cement. List them. Then put your principal amount and put the current value of the investment based on the current market price. And as you are getting the dividends, you are also recording them. And if you are reinvesting them, it means that your portfolio balance is also increasing. So that's a simple way you can keep track of your investments in the shares. You can do the same for the government bonds. So I bought GRZ bond number this. It's a 15-year bond. I spent 50,000 kwacha. This year, I made coupon income of this amount, and I reinvested it in this other 10-year bond or 15-year bond, and now I have a portfolio amount of this amount, 10,000, 50,000, 100,000, 1 million. It depends on the investment you had initially made and the coupon incomes that you are making. What I'm trying to emphasize here is that you need to keep a track of your progress, how your money is growing. That way it motivates you to keep going, so you don't feel like there's nothing that's happening. These are some of the strategies you can implement in terms of reinvesting, so that you can see the power of compounding working for you, and you just don't hear about it from other people. You can actually start seeing it work for you. Wealth isn't built overnight. It is built one decision at a time. You may underestimate the small returns that you are making and the power of reinvesting them, but do it anyway, and your future self will thank you for it. I would want to hear from you. Perhaps you are already utilizing the power of compounding and reinvesting even small amounts. Leave a comment in the comment section below and tell us what your experience has been so far, so that we can encourage other people that are hesitant and are afraid of reinvesting even small amounts, thinking that it's just a sheer waste of time. Well, this is all I had to share in today's video. Don't forget to subscribe to my channel if you haven't subscribed already by clicking the subscribe button. It is at the top, it is up here. Click subscribe right now, and don't forget to share this video to those whom you love and that you want to be liberated financially. Thank you so much, and see you next time.